guys, in this video, I'm going to be talking about money management. I'm assuming that a lot of people on this channel are doing Forex trading and binary options trading, and that's been the main content on this channel. And whatever I'm mentioning today is going to supersede all the previous video contents with regards to the topic of money management. In the past 2 years that I haven't been on this space, I've basically, been gaining a lot of new life experiences and insights, and whatever I'm going to be sharing today is basically a combination of that. So this would help you to avoid many precarious situations that you could potentially be finding yourself in. So the thing that most people actually suffer in trading, and they put themselves in very hard, dire situations, is basically through money management. And had I known these concepts back in the day, where I've discussed some very epic up and down moments of my past trading career, I wouldn't have found myself in such positions back then. Speaking in a position of a family man, there's only so much variance and volatility that you really want to have in your overall finance. Because generally, when most people go into investing, the people with the highest risk appetite are always those people who are younger, because they have less liability. Perhaps a lot of younger people, if it's not because they're getting a good disposable income, it's because they're still living in the same household with parents or an elder sibling or something, and the personal liability is not that much. Through the progress of time, when people have families, have kids, have home, whatnot, and then all kinds of expenses, and I can assume that COVID has not been kind to a lot of people as well. What I plan to share here is that with the right money management and financial planning, you can actually trade in binary options or Forex or cryptocurrency or whatever, and still have a certain risk appetite. Okay, so let's talk about portfolio management. And for this, there are many different schools of thought, but I think the one I like best is the 50-25-25. This approach can apply to many different things. I'll be using example of stock market and also cryptocurrency as some of the easiest examples. And then I'm going to be doing some case study. Then I'm going to be giving you some ideas with regards to where would binary options and Forex fit into the picture. So we start with stocks. 50% would go into a blue chip stock. Like Apple's blue chip, Tesla is blue chip, Microsoft is blue chip, Amazon is blue chip. So these are the stocks where they have a very stable and appreciating price, not by much, but we all know that these are stable, mature businesses. Unless there is a world war incident where everything ultimately is going to be affected, the volatility that we can expect is not much. And even if there's volatility in the price, there is still a good dividend program, and the annual dividend alone would actually justify your investment into these blue chips. So 50% in blue chips, and then another 25% would go into high cap alternatives. Not the blue chips. These would be, it could be penny stock, it could be something else, but it has to be high cap. And then in the remainder, these would be the lower cap penny stocks. If I were to use the example of cryptocurrency, we're going to be talking about 50% into your major cap Bitcoin and Ethereum. That's pretty much the only two major cap blue chips. 25% will go to high cap altcoins, and some of these high cap altcoins would be your Binance, your Cardano. I personally wouldn't say Dodge because I still think it's questionable. But if I were to name a few, I would definitely say Cardano, BNB, Solana, FTX, maybe even stuff like AVS. These would be fairly high cap. Actually, Infinity is AVS. And in the last 25%, this would be your yield farm launches, your new smart chain or Polygon launches. So if you want to experiment, you have to experiment within that last 25%. And let's talk about someone who is more doing overall. Let's give an even more totalistic approach, because some people may be wondering, what about property? No, people usually talk about property. This is where so property could be the 50%. But even within property, a property investor could take this same approach in how he's choosing his sites. For example, like 50% blue chip property, what would that be? You know, property in the city center where space is scarce. Even in a depression, you can still get a good rental yield because people still need to work in the city. In a depression, if it's places outside of the city, the price will be affected very quickly. That's not going to be so good, and therefore, if it's outer city, that should go into maybe 25%. The last 25% would go to things in a different state or province where it could be, you know, there's news of a new economic zone for the development of EVs or something, some news about that. But why would that go into the last 25%? Because that's a what if. What if something doesn't turn out to plan? What if, like, you know, epidemic strikes? What if COVID extends? And that could perhaps, you know, that could prevent white-collar laborers from coming in to those areas. That could present a problem. And then let's talk about finance. Let's talk about where would binary options and Forex fit into. Forex is actually quite broad because leveraged Forex trading, there is non-leveraged Forex trading. Non-leveraged Forex trading is when you speculatively buy, you know, certain currencies. People buy the greenback, people buy the Japanese yen, people buy the Thai baht, people buy, you know, the euro dollar at certain points, and their ideas are fairly long term. But having said that, in this day and age, a lot of people are also going over to cryptocurrency because they feel that the days of fiat is numbered. Because many people are aware that there are many fundamental issues with fiat currency, such as quantitative easing. And many people are preferring cryptocurrency because there are things like controlled circulation, there are things like halvings, deflationary measures that can help to preserve price, which is unfortunately not existent in the fiat world these days. Personally, I would think that 50% should go into, you know, the fairly stable investments. I would personally compose the 50%, you know, perhaps with a slightly larger chunk of property and a slightly smaller chunk of cryptocurrency, and that would be a hybrid way of how I would do it. About the 25 and 25, it depends on the approach that you're doing. Let's say if your approach to Forex is to use low leverage and grid, okay, then potentially you could use very large capital to do grid trading on Forex. With low leverage or no leverage, you can stand to gain. And I don't mean to say that taking Forex accounts with 500 to 1 or 1,000 to 1 leverage is a bad thing. Even though it's available, you don't have to use it to that extent. I have many friends that are actually on the Kucoin platform and they're doing grid trading on cryptocurrency. So they're doing like BTC against a USD, and you know, based on the bought figures, and the annual percentage return figures are actually very nice. For binary options, I would actually think that really should fit into the last 25%. The same comparatives with new launching cryptocurrencies, or let's say these could also be compared to the outer city investments. This would be the most responsible way of investing for people who have many liabilities to take care of, such as, you know, kids' house, you know, auto loan and whatnot. So what is the point of this whole capital balancing model? The point of such a framework is that in a good case scenario, categories A, B, and C, I mean the 50, the 25, and 25 all generate a return. And in many scenarios, even if the B and C do not generate a return, A still generates a return. And it can help you to continue in finding good investments for category C. And in some cases, if for any good economic reason that A is not generating, which would be very, very rare, it would really be epidemic or, you know, world war or something like that, then maybe B and C could have some new industry or, you know, some new technology that could contribute to an overall gain. So in other words, every segment A, B, and C has a high potential for gain. As mentioned in my previous video, everything forward from that point is going to have a very, very different tone to whatever has been on this YouTube channel previously. I hope you guys can see the purpose of this, and I hope that this can help to shape better mindsets, better financial savviness moving forward as well. Before coming back to producing content, I've been looking at other finance related channels channels relating to Forex and binary options. And when I look through the comments, of course there's always the usual spam, but among the genuine comments that appear, I see a trend of the same things happening through the years about like people talking about how broke they've become because of an investment into trading that did not turn out so well. So this is the precise reason that I wanted to, take this as building the groundworks from level 1. And in fact, this could mean that you may want to actually scale back on some of the activities on the binary options or Forex trading that you're currently doing. Or depending on the idea of how you're currently doing it, maybe it means that you can actually scale up. I would like to also talk about the Cashflow Quadrant concept by Robert Kiyosaki. I'm sure many people have actually read the books by Robert Kiyosaki on Rich Dad Poor Dad or the Cashflow Quadrant. And this is very relevant because most of the people in this world, maybe even like 95% or 98% of people, they spend their earnings directly. Personally, through the years that I've had good income, I've been accumulating assets, but the only problem with that is that I'm just not liquid. And at the same time, the assets that I've been accumulating are not really assets because I did not use these ideas that I presented. Condos in the expat-rich province during the COVID is of no benefit at all. Not only can it not get occupants easily, but just to get occupants, the rental rate has to be significantly reduced. So if anything, it's really more like liability. If I could do over a lot of the actions in my life again, I would have done it very differently. And I'm actually even thinking that liquidating some of these so-called assets which are not really producing an income, such as condos, to invest in Bitcoin mining farms could be a better thing. So that's actually something that I'm working on at this point. With the right kind of money management, you can do just about anything. There is a lesson that we can all learn from the people from the country of Brunei. Brunei is a small Asian country that is known for a very high level of affluence. Brunei is rich in oil and gas. But it's not just that. The people there naturally develop very good spending habits because, being a Muslim nation, alcohol is not permitted. And due to the very default ways that people dress, there's not even a point for many of the international brands to take root in Brunei because religion does not facilitate being flashy. Because the nation, like I mentioned, is rich in oil and gas, it is able to help the relatively small population of people have an above average income. And without the outlets to spend this income, if you think about it, isn't that the same as COVID for most of us? It might be true that during COVID, a lot of people lose jobs and get downsized. A lot of people get wage cuts from less working days per week. The net effect is that many people realize that even earning less, they actually save more. And this proves a point. I would like people listening to this audio or video to reflect on your spending habits of before and during COVID. Just changes in spending habits could actually help you to pursue a new investing pursuit in the near future. Now is around the time that around the world, many of the countries are beginning to cope with COVID and the cases are actually stabilizing. And because of that, many countries are reopening their shopping and entertainment. While I know that many people have excitement for hitting out to the malls again and for hitting out to parties again, but if you think about how long you have learned to do without a lot of these things, the point is simply about moderation. So with good moderation in the time to come, if you shop or party a quarter as much or half as much as you did pre-COVID after your country opens up again, with the other 3/4 or half, you can actually pursue investing. This is a short-term sacrifice, but in the long term, from these short-term sacrifices that you make, the returns from those can help you to go back to what you used to do, the usual amount of partying, the usual amount of shopping that you used to, but at the same time, your capital is growing and you're able to save instead of spend. If you have some reflections from listening to this audio, kindly express in the comments down below. Give me a like if you felt this made sense. The Forex and binary channels on YouTube right now, in my honest opinion, are becoming quite the cesspool because there is so much bragging, there is so much sensationalism, and these are not things that will help you get rich. If anything else, it's going to help you get broke. As mentioned, I haven't decided how exactly I want to be rebranding this channel, but I can just tell you for now that the content is going to be changing and evolving. If you haven't already subscribed, if this is the first time coming to this channel, hit the subscribe button if you like this content. Thanks for watching.